Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have John Ripplinger, the VP of Corporate Development for Imaflex, to give us an update since our last call. Imaflex trades on the TSX Venture Exchange under the symbol IFX and on the OTC under IFLXF. The company is trading at $1 with roughly 50 million shares outstanding, or about a $50 million market cap. I'd now like to hand it over to Paul Andriella.
Hey, thanks, Trevor. Yeah, great to have John here with us today. We interviewed Imaflex back in July. Happy to say that back then the stock was trading around 65, 70 cents. That's no longer the case. You guys have hit a new 52-week high recently. Off the back of what looks like a really strong performance in Q3. So happy to have John here to give us an update. John, welcome. Why don't we start by reminding everybody exactly what Imaflex does?
Sure, that sounds great, Paul. First of all, thank you to both yourself and Trevor for organizing today's event, and lovely to give an update to your subscriber base. So if you look at Imaflex, then guys, Imaflex, as you may recall if you were on the last presentation, manufactures and sells products for the flexible packaging and the agricultural space. The company was founded back in 1994 by 3 individuals, and they're still with the company to this day, and they bring in-depth experience in the extrusion business, the making of plastics, as well as in the converting business, which is the printing and bag making, etc., on plastics. We have 3 manufacturing facilities, 2 of those being in Canada and 1 in Thomasville in the United States of America. As well, we have about 250 employees. We have revenues for 2019 of about $81 million. We are profitable. We have a healthy capital structure and solid cash flows. So when you buy Imaflex, you're buying a company that has stability, that has positive cash flows, that has a track record of growing revenues. And then on top of that, we've got, and we'll be talking about this in just a moment, some blue sky opportunities with the clean technology product that we have called Advaseal, which allows us to offer growers a product that reduces chemical usage by over 99%. So growers right now, when they get land ready for growing season, they're using about 300 pounds per acre. We reduce that down to a matter of pounds through the technology that we have. And again, I'll get on to that in just a moment. And when you look at the company then, just of all, looking at the flexible packaging side, what we primarily do then is we make film for converters. That's about 70% of our business. And as I mentioned to you, converters take our product and they make it finished goods. So they'll take the film that we provide to them, and then they'll make the finished product. It could be bread bags, soil bags, wood chip bags, Kittler bags, etc. And on top of that, what we do is we take the waste that we have from that, and we make industrial products as well. We make our own converted products as well, not with the waste, but with pure resins. And that would constitute about 20% of our business. And that's mostly for the converted products in the United States of America. There's more of a demand for a one-stop shop in the United States. And so that's where we're offering that. And that's become a bigger part of our business. And I have to add too, that there's a lot more value add when you can provide that to the clientele, because you've got not just the film going up, but now you're making bags, you're printing and everything else. So the value to the company and to the customer goes up materially. In addition, we make the agricultural films. On the agricultural side, that includes things such as mulch films that you would put in the land. Anybody who's driven out in the countryside will have seen mulch films, and those films are used to prevent erosion, to stop water evaporating. They're used for barrier films to stop nuisance odors. And as well, we have a film that I mentioned to you earlier, Advaseal, which is a next generation film. We'll just jump in and take a quick look at that for a second. That we originally, Bayer Aspirin approached us, and they had an idea to coat a film with an herbicide. One of the problems that they had is that they had a film that they were using and it wasn't staying intact. So they approached us. We were able to come up with a film that would remain intact. And we subsequently bought the rights from Bayer. The individual that was running the project at Bayer came over and is now working with us. And we took it one step further. As we were talking with growers, we saw that there was a need not only for the herbicide to be on the film, but also for the full spectrum of pesticides, so the herbicides, the nematicide, the fungicides, and that's what we've got today, and that's what we've been trying out today. So over the course of 2020, we've had a number of milestones with respect to Advasil. We did earlier this year a trial called the efficacy trial, which was to look at one, when you lay the film on the ground, do those chemicals release into the soil in the desired manner? We had a check mark by that as we went through the trial. The independent study, by the way, not us, but an independent study, found that in fact those ingredients were being released into the soil in the desired manner. The other thing that we were looking for is, do those chemicals that have been released into the soil produce comparable crops to the grower standard? Now, we were comparing it against tomato plants because tomato plants are one of the most prevalent vegetables, some will call it fruits, that you have in the world. And we saw good things there too. We were comparing, when you look at the grower standard to our own, we were basically meeting the grower standard, and we were very happy to see that. So at the end of the day, Advasil was shown to be an effective fumigant replacement. So basically alleviating the need to inject all these chemicals into the soil. Basically what they do to get land ready for growing season right now is they come along with a tractor and they grate the land with these injection lines, which forces chemicals into the soil, about 200-300 pounds per acre. And our film has it's actually about 99% less chemicals on it. So it's a huge savings for the environment, very clean technologies I mentioned to you. So it's 300 pounds go down to about, a few pounds per acre. It results in good things for the environment, good things for the grower because you're saving money, and good things for the company here, of course, Imaflex, and our shareholders. So we're pretty excited about that. Now, one of the things that we realized is that as we were going through this project is working as we had hoped for, that we also have to do a release study. That study is going on. It will be completed shortly. We'll be getting back to the street, I'd say, within the next number of weeks. And that study is just looking at, it is the final and most comprehensive study, by the way, before you submit to the EPA. That study looks at, are the chemicals being released into the soil in the manner in which it's on a timely basis, such that there's enough time that has elapsed between when you've applied that film, the mulch film with those chemicals onto it, on the soil, between when you've applied it to the soil and when you pick the crop for human consumption. We call it the pre-harvest interval. So we want to show the EPA that enough time has elapsed to show that it is safe for human consumption. That trial will be completed within the coming weeks, and we will have the report. And then from there, we will submit our EPA registration package by around year end. So it could be December, January of 2021. And from there, it's a back and forth with the EPA, the U.S. Environmental Protection Agency. They may have questions, we have to answer. So it could take up to a year to get approval. Could be sooner, could be the full year. We have to see.
Fantastic.
That's in a snapshot.
Yeah. Perfect. No, it was really exciting to hear where you guys are at with Advasil, as that seems to be a very sort of a big catalyst for you guys going forward if you can get that up and running as fast as you can. Why don't we dive into Q3 numbers if we can? For businesses such as yours to be able to jump 19% over the same period last year, that's pretty impressive. Maybe you can tell us what caused the jump in revenues this year.
Yeah, so we've been excited about each of our quarters this year, and Q3 was another solid quarter. Good top line growth, good bottom line growth, and the margins we were very pleased with as well. And what we're seeing there is we're seeing a higher demand for our products. Some of it is, of course, COVID related. Our products basically provide protection, and they are used to protect and preserve. And so people do have some extra demand for that. As well, we've just seen overall increased demand because of the new equipment. Don't forget, as I've mentioned to you in the last call, we've invested heavily over the past number of years. We've got a new extruder in the United States. We've got a new printer. And as a result, these two pieces of equipment are allowing us to churn out more business. And as we look at what's happening there, essentially the more volume that you have, the less impact the overhead costs have on your business. You're diminishing the impact of overhead costs by the higher volumes. And in addition, what we've been able to do is basically effectively manage the spread between the resin input costs and raw material costs. As you've seen this year, there has been a decrease in resin prices because the oil markets have been hit pretty hard. And so we basically have to take those costs that we have. We give the customer, lower prices. Resin prices go down. As resin prices go up, we pass that along to the customer as well, trying to maintain our contribution margin. And we've been doing a good job maintaining that contribution margin and increasing the spread so that we can drive those gross profit margins and EBITDA margins up.
Now, I mean, it was a pretty significant increase in gross margins from 13% to 19% on a year-over-year basis. But
right.
How sustainable is that 19%?
Yeah, so when we look at the margins, what we've done, we don't give out a lot of guidance, I have to say, but what we have said is that we expect for the fourth quarter to see continued positive business fundamentals. We expect to beat the numbers that we had for 2019. And so we're expecting some good things for the business. I can't give you exact numbers because that's not what we've given to the street. So just to respect disclosure guidelines. What I can tell you is that we have indicated in a release that we expect business fundamentals to remain robust on a go-forward basis for Q4, et cetera.
Yeah, no, absolutely, fair enough. Just generally, sort of, if the conditions are similar, you would expect that the margins would somewhat stay, pretty positive. So I fully understand.
Yeah,
if you don't want to get too many details.
Similar, 100%.
Yeah.
If the conditions are similar going forward, we should be within a few percentage points of those,
okay.
Those margins. Yeah.
Awesome. And then, of course, big impact on the bottom line. Maybe, I mean, some of the things you just mentioned really explained all that, but the cash contribution, or as you're, seeing cash like this, I think you had mentioned that you're starting to pay down debt. Maybe give a sense of where the balance sheet stands right now, where you think it goes from here.
Yeah, so we've been very pleased with that. And, I talked with the guys internally here in the finance group, and we're probably in one of the strongest financial positions that we've been in years. And they're very pleased with where we stand right now. As I mentioned to you prior to the opening up the call, we currently have no debt on our line of credit. We have $2.3 million of cash. We have net debt of around $8 million. Net debt means you take your debt plus I've added in the leases, about $2.7 million, subtracted the $2.3 million of cash, and we have net debt of $8 million bucks. So that's pretty good number overall. Very, very manageable. And as I said, we'll continue to pay down our debt. And on top of that, we'll hopefully continue to generate cash going into 2021. We've spent, as I mentioned to you earlier, quite a bit on capital over the past number of years on the new equipment that we purchased. We don't expect great capital outlays in 2021-22. If we did do something, it would be because there's business demand for it, and that's to me, that's good business. That's good money to spend. So so it's not the heavy lifting has been done for the short term, and we'll see where it takes us. We've still got some additional capacity coming out of the United States, and as well, when you look at the United States, it was a big contributor, by the way. Usually it's been Montreal, but this past quarter we've seen some good things out of the U.S. Poundage was up across the business. So the only business division, if you want to call it that was down was the garbage bag. So the extrusion business was up, the agricultural business was up, the converting business was up. Garbage bag business was down. Why was it down? It's because people like you and I are sitting in our homes right now rather than the office buildings. And so the office buildings aren't asking for garbage bags. So that's why, as people start going back to work and businesses open up again, restaurants, etc., we'll see an increased demand in that. But that is COVID related from that perspective.
So, okay, so that leads me to the next question. Of all the sort of subsectors that you guys sell into, do you see, apart from sort of the garbage bags and what you described here, but do you see any other sort of industry trends that might accelerate or decelerate because of sort of, the way the world is right now, or the way we should be, hopefully, in the next coming couple quarters?
Yeah, Luckily for us, a big part of our business is the food industry. The food industry is, somewhat, let's say, recession resistant. People are still going to the store and buying food, probably buying more food now that they're at the house. And as a result, we don't see any downturn, from a material perspective on a go-forward basis for the foreseeable future from that side. There'd have to be a complete lockdown before we would see a real hit to our business from that side. So the answer is no. From the garbage bag business, yes. Until people start going back to the offices, restaurants, etc., we'll see a bit of a downturn there. But that part of the business is not a significant amount, as you saw by the results this quarter.
Let's go back to sort of the cash generation, and you've been paying down debt. You've, for the most part, done your sort of capital expenditures. But if in general, going forward, if you guys are building up a bigger cash position, is there anything else you're going to look at doing? Is there opportunities for M&A, or do you guys expect to be able to grow, maybe more emphasis on Avasil or getting ready to commercial launch? But what do you do with excess cash going forward?
Well, there's a lot of things that you can do with excess cash, and one is to buy additional equipment. Two is to do small tuck-ins. Three is to invest in Avasil, and I've even had people calling me this week to say, would you look at doing a dividend of some sort going forward as well? That's the type of thing that has to be decided at the management board level, and bringing possible projects, etc., to the forefront. But as you've probably seen over the past number of years, Joe, our president, is very prudent. He manages the business very carefully, and he'll make sure that we're investing in those areas where we feel that we can get the most bang for the buck for the shareholders.
And obviously, there's been a change in sort of political winds in the U.S. Do you see any changes in your business because of the new administration?
It could be more beneficial for Avasil. As you know, Avasil is a clean technology, environmentally friendly. The current government coming into power is more prone to so inclined, so that could benefit us in terms of approval and acceptance of Avasil in the U.S. But otherwise, we're fortunate, as it's been indicated. We've got a plant in the U.S., and I think the U.S. wants to promote businesses that produce in the U.S., and we can say we do just that. Not only do we manufacture, but we employ down there. So I think we meet a lot of the criteria to be able to continue to see good growth there.
This is going to be a short update because there's, we've already done a pretty substantial interview with you before. I want to remind any of the listeners, if you guys do have questions, please let me know as soon as you can. I'm sort of almost at the end of my questions. So if you've got something that you want me to ask that I haven't, please let us know through the chat function there. Give us, it sounds like your business is nice and healthy right now. You guys had several really good quarters, but apart from Avasil, any other initiatives that sort of investors should watch out for sort of over the next 6 to 12 months?
Well, I think you want to continue to see one, of course, Avasil is an important one, but continue to see the margins, the growth in the top line on a go-forward basis. We're known for the R&D, as I mentioned to you. When it came to Avasil, we were approached for the film. So we're looking at a variety of new ways to meet our customer needs. One of those things that we're doing right now is working with companies such as BASF to develop films that are more of a compostable nature, more environmentally friendly. So we're working with them on kind of twofold, in fact. One would be with resins that are derived from chemically modified petrol, and another that is derived from, we call it PLA, polylactic acid, plant-based products. And both of those are what we call ASTM 6400 certified, which means they biodegrade in 180 days. So coming up with new products to meet an increased demand that we expect to come in the years to come from our clientele. Right now, I think I mentioned to you on our last call as well, it's not a huge moneymaker, but we have to be prepared to meet the needs of that market. And we're ensuring that we're working very closely with our suppliers to be able to provide that as those demands come down the pipe.
Gotcha. So your share price has jumped in the last little while, certainly off the Q3 numbers.
Right.
I have to ask, any thoughts of doing an equity raise in the future, or are you guys happy with what the capital that you have in the business already?
Yeah, if I was going to do one, I couldn't tell you anyway. But I'll say this. Right now, we're happy with where we are. We don't need money. I've got people calling me and saying, "Do you need money?" We don't need money. But that doesn't mean we won't need money. I mean, if we decide to buy additional equipment, if we decide to do a small tuck-in, depending on the approach with Advaseal, it could mean at some point in time that we need it. But at this point in time, it's not on the front burner. But we'll see what materializes. If we did need money, we'd have to see what we would do. It could be a combination of debt and equity. It could be a number of different things. But we've seen an appreciation of the stock. Do we feel, and this is me speaking, do we feel that it's where it should be? The market decides, but we're trading 10 times earnings. Until the stock went up, was about 4 times EBITDA, which I found to be it's let me say it's attractive. That's what we feel like when I look at some of the other stocks that are out there. But again, the market decides, and I always encourage people to follow us, and if they want to jump in and be shareholders, we'd be happy to have them.
Hey, John, refresh my memory. Is there any analyst coverage? Do you have anybody following you?
Yes, we do. We have Beacon Securities. Ahmed Shah is covering. Yeah.
Perfect. Great. And also remind us, insider ownership. There's 50 million shares roughly outstanding. How much is owned by insiders or management?
Very good, healthy insider ownership. It's about 56% that is owned by insiders. Yeah, that's about 4 people.
Yeah, so very, very strong vested interest here.
Very much so. Yeah.
Yeah. Now, let's go back to Advaseal. Refresh our memory in terms of what's the addressable market for that product. Obviously, in agriculture, the numbers get substantial, but what do you see the commercial opportunity here for a product like this?
It's and I'll use this word, and it sounds big, but it's huge. It's big. We have patents in 20 countries around the world, and in the U.S. alone, we estimate that there's about 500,000 acres where you would need to have, or you could use our film. To give you an example, just in the U.S., if you did one plant, we've worked with a company that goes by the name of Fostel, and they've helped us to design the coating process, et cetera, that's required to be able to produce at 1,000 feet per minute. And if we did one plant, which we believe is the size we would get, that plant would produce about $65 million of revenues, and the EBITDA on that would be between 30 and 40% EBITDA margin. We take 35% pretty carefully. And then from there you would go. Now, when we start out with the Advaseal, we'll have to see what the approach is. I mean, there's a number of different avenues for us. We could team up with somebody. We could go it alone. We could license. We could keep US for ourselves. There's a variety of things that's being discussed at the board level and with the management team. And once that is decided, we'll communicate that with the street. The beauty of Advaseal is that, as I mentioned to you, people are already using fumigants. They're already using mulch films. So all we're going to tell them is that take our mulch film, which has the chemicals on it now, skip the fumigation process, save some money on the chemicals, save the environment, and it's good for you. It's good for us. The other thing with Advaseal is because of the nature of fumigation, you often have to have buffer zones between a farming area and an area where there's basically a populated area. And those areas, they're making no money on it. So even if there was any type of resistance, we'd say, look, try it out in the buffer zone area right now. You can do that now because it's not volatile. Our chemicals don't spread. So try it out in the buffer zone area. If it works, great. We'll do some more business in the coming period when you do the next planting for the next growing season. So there's a lot of opportunity there. There's a lot of different avenues that we can take. I think we'll start out slower, conservatively, and from there, grow the business.
It sounds like an exciting product with tremendous upside, and I love to hear 30 to 40% EBITDA margins on something of that sort of volume. So pretty spectacular.
Yeah.
Why don't we just sort of wrap it up here? But John, maybe if there's a message or two you want to make sure that our investors hear as we go here, maybe sort of what to expect over the next 6 to 12 months, or just a general point that you really want to walk away with, what would that be?
Yeah, I guess what I could say most of all is just as I said earlier, to encourage you guys to follow the story. I think if you follow the story and you take a closer look at the business, you'll see that we've got a pretty interesting business here. I think we're in an enviable position. I think we've got a year which we call a pivotal year. We've got the growth on the top line. We've got good solid margins. We've got what I believe, as I said earlier, probably a discounted stock price. We've got positive cash flows. So all in, and we've got the Abyssal on top of that. So all in, I think it's something that deserves to be followed, and hopefully, as I said, we can count you as a shareholder at some point in time going forward. But any questions, I'd be happy to answer them if people have want to reach out to me.
Well, so if they do want to reach out, what's your website address and maybe an email or some way they can contact you?
Sure. So the email address is pretty simple. It says John R. So JOHN-R like Ross at Imaflex, IMAFLEX.com. I'll just repeat that one more time. JOHN-R at Imaflex, IMAFLEX.com. And my direct phone number, actually it's not direct, but it's 514-935-5710, and it's extension 157.
Perfect. Thank you, sir. So that's John Ripplinger, VP of Imaflex. Thanks for catching up with us today, and we certainly look forward to the next update.
Well, thank you again for having me, guys. That's very good of you to have me on again. Take care and enjoy your evening, everyone.